Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As you can see, a different background. I'm actually in New Orleans, attending my very first Mardi Gras parade last night, and we'll be back out there in tonight doing these bucket list type things. As you see on your screen, these are the stocks that are going to be featured in this week's recording. And as a reminder, if there's a particular stock you're interested in, you can go directly to it by hitting the chapters feature on the video. All right, let's get into the market. As you can see, we're moving higher here, which is kind of interesting because we had Chairman Powell on 60 Minutes that came out, and I thought he did so in the conference call after the last Fed meeting, but seemed like the market was a little shaken with the futures, but we did recover on Monday after Powell pretty much put the kibosh on any sort of a rate cut in March. But he did kind of allude to there may be as many as 3 rate cuts this year. So just not starting in March, but later in the year, perhaps. But the fact that it was at 3, because there was some conversation about perhaps moving down to 2. So I think the market has taken a little bit of positivity out of the whole thing, aside from the, okay, we got to get over the March rate cut. That's not going to happen. And then you can see what's going on with the market. And this is a little bit concerning, I think. We have what we call or what I call is a pennant pattern here, and it is a breakout type of pattern. I talk a lot about breakouts with triangles, ascending, symmetrical, or descending triangles. That's kind of how I made my name in the whole world of options, by having a specific strategy around those. But a pennant pattern is also a breakout pattern. And you can see why it gets its name. It looks like a baseball pennant. You know, your favorite team, you put it on the wall. It looks very similar, but you can see that we're getting these really tiny, low volatility bars as we're climbing. And then when we add volume into the mix, you can see that volume is declining. Now, we're doing this recording during market hours on Friday. We usually wait till the market closes, but you will see that last bar come up a little bit as we finish the day. But it is noticeable that quite low volume on this continued rise, which means this potential wave 4 could be happening sooner rather than later. I just wanted to make a comment. In the last recording, there was somebody quit showing that wave 4. The market keeps going up. As a reminder, we're in a wave 3. We've labeled the wave 3. And this software, by the way, is from the Hub organization, HUBB.com. I know a lot of you have said that you've acquired the software and you really, really like it. I think it's the best Elliott Wave software that exists. I've been trading Elliott Wave since 2001. I can assure you I'm going to use whatever I think is the best software for Elliott Wave. These are just projections. The circles are the current waves. Yes, we've been going up, and Elliott Wave has nailed it. We're going up in a wave 3. Now, at some point, there'll be a wave 4. So this is a projection that if the wave 4 were to start now, that's where you could expect to find some support. And if that occurred, then this is where you could expect the market to continue up in the wave 5 impulse. Another thing that's interesting is when you see these levels, the market likes that, or at least the algorithm likes that level in the market. And remember back when it was at 5,000, and I mentioned to you, the algorithm likes 5,000. It likes the S&P going to 5,000. Well, guess where we are? That's where we are. So it's nailed it. Absolutely perfect on the market. So if you've been following along with this software, you've had a pretty good couple of months. But the question becomes, are things about to change? You know, in that article, it says no pivot yet from the Fed, but is there about to be a pivot in the market? And I think that is signalized by this pennant pattern on very low volume. Something's getting ready to happen. That much we know. All right, moving on from the S&P. This is kind of an interesting thing. Rates have ticked back to the upside, and the market is just blowing it off. It's like, oh, we don't care. And we continue to move higher. Even the Qs, once we get there, have continued to move in concert with the rates going up. And that's not normally what happens. Now, I think this is getting discounted because of the fact that, all right, maybe we get a little bit higher move in rates, but we do know, based on what the Fed's told us, they're looking at rate cuts down the road. And so we can absorb some small rate increases right now, as long as it isn't anything significant. as we expect rates to go back down. So I think the market's just letting that go and discounting it. The dollar continues to just be exactly where you want it to be, in that range. I'm not going to go through that again. I do it each and every week. Go back and watch a previous recording if you want to see the levels that I watch. But note that the wave 4 on the dollar is right at the 61.8% fib level, the strongest of all fib levels, in my opinion. So perhaps that's it for the dollar, and that would make sense too. The dollar's crept up, interest rates have crept up, and then as we start looking for rate cuts from the Fed, that could weaken the dollar a bit. Now, a positive that you can take out of this is there's been all kinds of information about debt. The consumer debt is over $17 trillion was a number that was released last week. Holy cow. I think the debt in the country is bad, but that's consumer debt. But people are still have confidence in the dollar. And as long as we stay strong without being too strong to hurt international companies on the exchange rate, that's this Goldilocks scenario. That's where you want to be. The VIX, with these low volatility moves up, you might have expected perhaps a little more to the downside on the VIX. Not quite. We are still hanging around in this 13 area, which is constructive enough. But at what point do we move back to the upside? Now, we had noted last week that perhaps we were starting to build a bit of a channel here on the VIX, where we were getting higher highs and higher lows. But note that we've broken out of that lower end of that channel. So that kind of takes that away. So it was short-lived, just lasted a couple months. And now we start to look to see, are we going to get a bounce off of this low level on the VIX? Looking at the DIA, it's just kind of not moving like the S&P or the Qs. I think that market rotation into the Dow, for those that wanted to, occurred before the end of last year. A lot of people, myself included, were looking for potentially some recessionary signs in the first quarter of this year. We're not done with the first quarter yet, but maybe that gets pushed out. I still believe that there's going to be a recession, a mild one, but I do think we'll have one. And I think those that wanted to hide in the Dow did so before the end of the year. And so there just hasn't been much impetus to move the wave 3 higher. So it's just kind of been this little crawl in the Dow. Now, when we take a look at the Qs, and by the way, we looked at the Qs on Tuesday night's Tradefinder. We looked at it pretty much in depth. And speaking of Tradefinder, if you haven't joined us for a Tradefinder, you can sign up using the link that you see on your screen now. We do it every Tuesday night at 9 p.m. Eastern time. We talk the markets. We look for trade ideas. And we have a live Q&A at the end. It's a great community. They ask great questions. They communicate back and forth. So if you haven't done so, sign up for Tradefinder and join us this coming week. Love to have you. Just wanted to give one little other plug here to Tradefinder. Take a look at this stock that we looked at as a consideration Tuesday night, MPWR. Look what happened to that yesterday, and then a little bit of follow through today. So yeah, we find pretty interesting case study consideration. So join us. All right, back to the Qs. When we take a look at the Qs, they have a very similar pattern to what we're seeing on the S&P. Now, one thing to note that I've talked about in the past is that the S&P, the Dow, the other markets are in a wave 3. The Qs are still in a wave 5. Which one's the leader? Which one's the follower? Kind of thought with the continued breakout that we might see that 5 relabeled to a 3 to join the other markets. That hasn't happened. So with this pennant formation here narrowing, we're almost at 100% extension. We had a 38.2% wave 4 correction. That led you to look for a 61% extension. And then the extended C level, if it continues, goes to 100. We're almost there. So we're getting a bit extended in the Qs is my point. So I think that caution is the name of the game. And I just feel like maybe the market is about to do a pivot. Taking a look at the Russell, a little bit of a bounce here. So it held on to 190. We were wondering, could that 190 level hold? That's been support for quite some time. As you remember, going back a ways, it was resistance. And then going back even further, it was support, going up to 210. So we've held it so far. And are trying to bounce. We're at that round number of 200 right now. So we've kind of tightened the trading range on the IWM here over the last month or so. and we'll have to see if we can break above 200 or below 190. So I think if you're interested in trading the Russell, you kind of wait. If we can break above 200, I think it's likely we go up there and hit that wave 5 around 210. But if we can't do it and we fall below 190, then I think you have a trade down to 170. So we're kind of in the midpoint here. So this is a watch, wait and see, and you'll have a trade one way or the other on the breakout. By the way, as a reminder, please leave a comment under the video. Every single month this year, we're going to be giving away one of our level 3 subscriptions at ewotrader.com. It's 3 different portfolio subscriptions, so you get a number of different trade ideas every single month. It's worth a few $1,000s when you put the 3 together, and we're going to give one away. And all you have to do is be subscribed here at Elliott Wave Options on YouTube and leave a comment. And each and every week, I read the comments, and I try to answer as many as I can. I can't get to them all, but I answer as many as I can. And so when you guys leave a comment, I listen. So some of you ask about, and this is where we get some of our ideas for these market updates about XPEV in China. And you can see it looks like it's trying to base here a little bit. And I think China's an interesting space, especially as our market's beginning to look awfully tired with those patterns I showed you. Money's going to rotate somewhere, and China's been way behind. You know, they've had a hard time getting their economy going after being shut down for so long. Kind of call this like the launch pad effect. When you have these really tight consolidations in a horizontal fashion, oftentimes you get a bit of a blast off move. And I was reading that over in China, the EVs are kind of going towards the Chinese manufacturers because they're spending a lot of time on getting fancy electronics inside the cabin, more than they're worried about the outside, etc. They're taking some market share from Tesla. So this is an area where it's beaten down. It hasn't followed along with what the rest of the markets have been doing. So this could be a place to look. And another area, if you didn't want an individual stock, that I think same type of scenario here is the CQQQ, which is the China Technology ETF. Again, it was a wave 3 to the downside, just like XPEV. But at some point, we're going to get that wave 4 corrective move. And with such a big move to the downside here, it's kind of a low risk, decent potential reward type of a scenario for speculative money. And I say that because when we're putting regular capital into work, we want all of our indicators showing strength and expectations to continue the move, etc. So when we're looking at something like this, we would be saying, hey, this is pretty overdone, and I think some rotation may occur. So that's a speculative type trade. It's not based on pure technicals. So I think that's the kind of idea you can look for there. Some of you ask about Boeing. A couple of you ask about Boeing. Of course, gosh, how much more bad news can they have? I think an interesting thing here, and I talked about this in Tradefinder as well, is Boeing needed to hold 200. If it didn't hold 200, it was going to test that 180 low there from October, but so far it has. And we're getting a little bit of a triangle formation here. You do have to wonder how much more bad news can come out from Boeing and the fact that it's sitting on support. It didn't push it down below 200. This wave 4 at 89% means that's a disqualified Elliott wave pattern, so we take that off. So we're just looking at this triangle type formation. Once again, speculative money here. If you're looking for a place to go and you have a longer term horizon, I think you could do worse than Boeing. But again, you want a longer term horizon because it may take some time for all the regulatory stuff to play out, etc. there. And Tesla, I just mentioned how they're losing market share in China. This was a big hold here on Tesla. We've been pretty spot on Tesla as we've been going through. We had the 240 level, and we said if it broke that, it was going to 220. And the next level of support was going to be around 200. And it just blew right through that. So then the next step is almost like a 20-point stair step down on Tesla was 180. And if it didn't hold that, then 160 was next. As you can see, that's the lows back from May of 2023. But it did so far hold there. We have a gap to fill. So maybe we get a little bit of a bounce, but the issue is if we come back up and fill this gap here, 200 is now resistance. So we're going to have some work done here on Tesla to break back above that 200 level. Now we had a pretty vertical move down here, pretty straight move. So if Tesla could break above 200, you might have something going because there's not a lot of resistance in the way. And perhaps we go all the way up towards where that wave 4 projection is, again, if the wave 4 were to start today. So this wave 3 low holding at 180 is very key on Tesla. So watch that. My viewpoint here, if it breaks above 200, I think you could have a bullish trade on Tesla. But I would want to see that happen first. So I wouldn't do anything now. Kind of a watch and see again here. But if it broke below 180, then you got to trade down to 160. That's what's going to happen there. Looking at gold, and with interest rates ticking up, that got rid of the bid that looked like maybe we're getting a bid in gold. So it's just on pause. And that's what the chart's showing us is a bit of consolidation in this triangle. Once rates do start to go back down, as we start to get closer to the new expectations of when the Fed may cut rates, I think you'll see a renewed bid in GLD and likely see an upside breakout. But remember, with a triangle, they can break either way, so there's always a potential to break to the downside. So if we get some news that pushes that potential rate cut scenario out even further, which we just had that same thing happen, if that happens again, we could break to the downside. But barring that, a little bit of time goes by and they start looking to rate cuts, it could break to the upside. So there's a scenario for gold breaking either direction, and I do think gold is going to make a breakout. The GLD, at least, is going to move. Bitcoin, talk about a stock on the move, is back moving again. In fact, at the time of this recording, it's higher than this. It's up at 47,000 and change right now. Again, at the moment that we're recording this, the big key, we talked about this before, it did hold 40,000. That's where it needed to hold. It did. So we had some consolidation. I'd mentioned last week it was having trouble getting above 40,000 or 44,000, and it did. So we could be off to the races, especially based on what it's doing today with Bitcoin. So the Bitcoin bulls pretty happy right now. That was key, being able to finally get above that resistance at 44,000. And then we wonder, could it drag Coinbase with it? And so far it has. We mentioned Coinbase needed to hold 120. It had to hold 120, or we're looking at 80. That would have been a significant move lower in Coinbase. We had a kind of a vertical run here as Coinbase doubled in 2 months. So some pullback is warranted. It came down to a level based on not just the retracement of a big, strong vertical move, but the fact that the Bitcoin ETF started trading. A lot of people wondering, are they still going to have as much activity? People just going to buy the ETFs? But at least for now, holding that 120 level, and it does appear that even with the Bitcoin ETFs, that as Bitcoin goes up, it's likely to drag Coinbase with it. So right at a 61.8% fib level, again, my favorite of all fib levels. So if you want to take a shot long on Coinbase, I think that makes sense too. 120 was a support area to hold. It also has a strong fib level. It's starting to bounce with Bitcoin. So I think you could take a look there if you're interested in something as well. And last but not least, got to keep in the INDA, just continues to move higher. But note that it's got a little bit of that pennant formation, just like the S&P, the Qs, etc. So maybe that move in the INDA is starting to get a little tired as well as we approach that wave 5 target. You can't discount. It's been one heck of a move in the INDA recently, but maybe time to rest there. So hope everybody enjoys a wonderful weekend and look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Tradefinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.